Welcome. My name is Lauren Robinson. I'm one of the VEF board members. I'm also COO of Highline Beta, which is a pre-seed investor and startup co-creation company. VEF is Vancouver's premier networking forum for technology entrepreneurs. We'd really like to extend a special welcome to anyone who's new coming out to one of our events this evening. We have a number of really exciting events that are coming up this year, and we've just recently launched a new website that you should definitely check out and register for the next event that's coming up next month in March. I'd like to just take a moment to say thank you to our board members. We've got a number of different people that are here today. Please say hello to them and say thank you for bringing them together, bringing the panel together, and bringing some really interesting entrepreneurs and investors out to tonight's event. Round of applause, why not? We're delighted to be in this beautiful venue tonight, and I just wanted to ask up Rich Osborne, who's the Managing Director of TELUS Ventures, to just say a couple words about what they're doing here.
All right, thanks very much, Lauren. I've only got about 45 minutes of stuff here, so welcome to TELUS Garden. If it's your first time, have a look around. There's a demonstration lab just as you go around the corner to the left. If it's still open, I encourage you to go take a look. Some cool stuff. I'm assuming most of you know TELUS. I just thought I'd give you a couple reference points. I'm still in my first year here, so I need to refer to my notes sometimes. But we do about $13 billion a year in revenue. We're a $26 billion market cap. That's all very interesting. What's relevant maybe to some of you in the crowd, though, is we buy about $4 billion a year in products and services from technology companies every year. And we have about 13 million consumer connections. We have about 120,000 businesses that are customers. So in my group, the Ventures group, obviously we're investing in companies from seed to growth stage. But we like to talk about the value that we can bring as a customer, as a distribution partner, as an acquirer of technology, as an evaluator of technology. And some of the ways we do that, just very quickly, we are at the seed and earlier stages launching programs. Some of you may know something called First Step, which is a way to educate both the startups, ourselves, and the investment community around some edge thinking. So what are the new markets that are developing? What are some of the theses that are being developed in those markets? So think about IoT or AI or machine learning, health IT, and try and bring some of that learning together. And we share those sessions. They're guided discovery sessions, non-NDA, with the entrepreneurs, and kind of come up with, here's where we think the market's going over the next 5, 7, 10 years. We are working very actively with incubators and accelerators across Canada in Vancouver, Calgary, Edmonton. And then we're also doing things like we're trying to leverage our role as a carrier. So we bring together every year a group of global carriers to try and look at syndication of investment opportunities and sharing not only learnings, but sharing companies that we think are interesting for distribution deals. So, if you happen to work with us as an investee portfolio company, we'd like to expose you not only to our network, but to global networks across the globe. So, with that, again, thanks for coming. Enjoy your evening. Great content, great panel, and look forward to chatting with some of you over the next few months. Thanks.
Okay, so just a few words on a special event that's coming up in the next month. The BC Tech Summit, that many of you know, is a pretty special event that's going to be happening in the next month. They are hosting an investor-driven pitch session, which is a full-day session that's happening on March 15th. There's going to be four different streams: clean tech, health tech, ICT, and digital, with many international investors as well as investors coming from across Canada. And would encourage you to register at bcic.ca, Invest in BC. Whoops, sorry. Just another thank you to the rest of our sponsors. We have a lot of different people supporting us and ensuring that the events are high quality and we're in great venues such as this. So thank you again. And if you are a sponsor and are interested in supporting the VEF, please talk to Kelly or one of us on the board. Oh, sorry. I'd like to ask up Bob to just share a little bit more about the Angel Forum.
Hi, I'm Bob Choworth-Musters. I founded the Angel Forum now 20 years ago, and so I thought I'd just bring your attention a couple things that are coming up. One of the things we're doing with Basil Peters in the next little while is an exit execution workshop. It's sponsored by Harper Gray. Stephen Lucas is a fellow you should get to know. Many of us have not sold a company before, and big question, of course, is if you get an unsolicited offer, how do you respond? It can take you 1 or 2 years to actually prepare for a very valuable exit, and only 25% of saleable companies actually get a successful exit. So a well-designed and executed exit can probably bump your valuation up by 25–50%. So Basil and I are running this workshop on March 8th at SFU downtown. It's a full day, so we're looking for serious people to come along, investors, founders, directors, executives of companies, CEOs, etc. So Basil, who is the author of Early Exits, will be the lead speaker, but we'll have some people in from law firms, M&A firms, and so forth. And we're about 70% full right now. It'll probably be 18 months before we do the next one. So there's the short address for you. Sorry. There you go. At re.tc/exits. And the other thing I just want to mention to you is that we're doing an Angel Forum. Our 41st Angel Forum will be on June the 14th. And here's some examples of companies that have got funding recently from them. As you can see, there's some good names, but Microdermics, for example, EI, Crop Sense is ones in the last little while. 18 companies will present to 55 investors, and we only allow investors and selected companies to come along. So early application registration is now open, and check us out at angelforum.org. And I think that's probably all you need to know. Thanks very much.
Is Maloon here to just share some words about... There you go.
Hey guys, just wanted to briefly get up here and talk about Expo Labs. I'm going to save you my personal story. Built a couple of companies, sold them, invested in companies such as Recon Instruments, invested in Uber, which is who Expo was started by, Garrett Camp, the founder of Uber. I'm a partner in the fund. It's primarily based in San Francisco, but the program that I want to talk about today, it's called Expo Labs. So what we do at Expo Labs, we did it last year in San Francisco and New York. We take applications from outside companies, entrepreneurs. The ones that we accept, we give them $500,000 US. We give them office space, meaning they share office space with Garrett Camp, me, Naveen, who's the founder of Foursquare, Human, who founded AdThis. We have Vitor, who was the first 20th employee at Twitter, amongst other amazing entrepreneurs. And we kind of helped build that platform that we wish we had when we were early on in our development stages. So this is the first year that we were doing it in Canada. We have no idea of how it's going to go, but we're trying to get the word out and see if we can encourage some entrepreneurs to participate and apply, whether or not it's somebody in the audience here, or if you know anybody who might be interested. We also have 2 tiers this year, which is going to be either $250,000 US in capital or $500,000. The office space that we give is going to be in Vancouver, San Francisco, and New York. If you're traveling, you're welcome to use any of those, as well as mentorship. So on a weekly basis, there's different programs. There's quarterly check-ins where it's like we fly everybody down to San Francisco and New York, talk to them to get real-time feedback, and if there's any kind of partnerships that could be done with any of the companies that I've mentioned during this speech, those are all options. So very simple slide. There's one link at the bottom there, expo.com/labs. That's where you can get all the info for anybody interested. And I'm also going to be hanging around tonight if anybody wants to have a chat. Thank you.
So we do have our panel coming up, but we have a number of different lightning pitches that Tony here, one of our board members, is going to introduce.
Hi everyone, my name is Tony Rautava. I'm a VF director and work with GrowthWorks Capital. We're going to hear about some cool stats tonight about growth capital invested here locally in the last few years. One stat that I'm proud of is that GrowthWorks has invested $600 million in 133 companies here in BC over the years. Now, tonight we have 4 lightning pitchers. Each has 100 seconds. So we're going to get started. And the first pitcher is, we have Marilyn from Linkage. Welcome, Marilyn.
That's great. Thank you very much. Okay, are we started? Okay, that's great. On average, in the construction industry, 57% of the labor is non-billable. I ran a custom installation firm for 23 years, which dealt with electronics and construction, so we add technology. And for that industry, the average was 65% non-billable. The primary reason for this is the lack of site availability and construction delays. So that creates tremendous peaks and valleys in labor demand. During the valleys, you work really hard to keep your guys active, but we know Parkinson's law. It expands to fill the space that you give it, or it has. And then in the peaks, you are just wild. So lots of overtime. Sometimes those peaks could last for months. You also can move your guys from site to site just to keep your relationships happy, and an awful lot of that is non-billable. We're in beta now, and Linkage is a software solution that allows you to find and foster trusted partners for skilled labor. So when I'm in my peaks, I can open up to my network, and I can take advantage of the time when they're in their valleys. And when I'm in my valleys and I have spare capacity, I'm available to them. What's been going on on our beta testers is that the guys are amazed at how quickly they are connecting, minutes often, to skilled labor, and how safe and how easy it is to create a private network. So check us out at linkage.com. Thank you.
Okay, thank you, Marilyn. Next we have Angela Hamilton from Coop.
Yes. Thank you.
You're ready to go.
Thanks so much. So Coop is a shared economy platform for neighbors to rent things to each other. I love to start with this image because I feel like it's one everyone can relate to. Everyone has a space in their home that looks like this, right? And it's stuff that gathers dust and doesn't really get any use and doesn't really do much of anything for most of the year. So we can see what the problem is. Everybody has too much stuff sitting around. And on the flip side, there are plenty of people who would love to use your thing to do something new or make something cool, but they lack the means to do it. So we're going to bring them both together with Coop. So this is how people solve this issue now. As you can see, Coop kind of sits right in the center of the needs of convenience, affordability, and reliability. And as far as market size, here in Vancouver, if 1% of people started using us 8 times a year at $19 per transaction, we'd be looking at about $4 million cash flow. That's just here in Vancouver. Obviously, this is a problem everywhere, so we're hoping to get to San Francisco and New York within the next year and then on from there. So a lot of people have tried this. Here are some of the things that we're doing to set ourselves apart from our competitors, including image recognition, a rental calculator that tells you what to charge for your item, item curation, delivery. As far as our ask, we're not raising actively right now, but we are looking for advice in terms of building this two-sided marketplace and making something really healthy out of it. You can check us out. We're actually launching next week, next Tuesday. So go on coop.com and you can check out the whole platform if that interests you. And thank you so much.
Okay, thank you, Angela. And next we have Jessica Pausch from Mesh Food Exchange.
Hi, everybody. My name is Jessica with Mesh Food Exchange, and this is the problem that we're out to solve. Currently, 40% of the food that we grow is never consumed, half of which exists along the supply chain, resulting in $31 billion each year in economic loss potential in Canada alone. Oftentimes, because the surplus food, if it has a minor imperfection, is discarded because it's easier and cheaper to throw the food out than to manually coordinate and find one-off users for that overstock. And so we're creating Mesh, a business-to-business food rescue marketplace to help connect surplus food providers, retail, growers, and distributors with recipients that can take that overstock in real time. Our software is helping to connect, increase the access to new markets, improve the traceability for recalls, as well as improve the KPI and reporting ability for food tracking. We're in our beta stage, and so far we've been able to move almost 50,000 kilo of food. And as a social enterprise, we monitor different metrics such as the amount of carbon emissions that are diverted, meals, and money saved for recipients. Our ask is we're completing our seed round of 500,000. We're about almost halfway there. We're also looking for strategic advisors and seasoned professionals that have experience in supply chain optimization as well as marketplace development. And our goal is to help scale this across Canada so that we can help users save money, reduce waste, and feed more. Thank you.
Thank you, Jessica. Next we have Frankie C. from Seabreeze Connect.
Hi. Hi, I'm Frankie from Seabreeze Connect. Seabreeze Connect is a destination-based, time-driven web platform engaging cruise vacationers before they start their sea journey. Do you know there are over 24 million cruise vacationers every year booking cruises months in advance, going to popular destinations, including coming to Vancouver for the Alaskan cruises. When they get on board of the cruise ship, they're literally traveling with thousands of other passengers that they never met before. If I could use our Vancouver Sunrun as an analogy, the current cruise booking model allows individuals to sign up the event individually, and when the big days come, they just show up in the starting point and run with thousands of other people that they don't know. Well, the experience is okay for an hour of running experience, but it's not ideal for a 7-day cruise vacation experience. So with our platform connecting cruise vacationer ahead of times, it's opened up many opportunity and possibilities, including ride sharings with like vacationer and finding your travel buddy speaking the same language with similar travel profile and join the vacation together. It's create a new type of peer-to-peer tool experience. And going back to the Sunrun's analogy, it's just like this, the experience. So you form your running group, attend the training clinics ahead of time, and sign up, run the 10K and celebrate the 10K, celebrate together. So it's a totally new type of experience. So on the other side of the platform, when we connect all the vacationer ahead of time, it creates value added for the tour operator, namely customization, in particular for the language-specific tour, and differential pricing and capacity planning. If you're an advisor or investor who also believe in opportunity in the travel ecosystem, we would like to hear from you. And if you are big in cruise travel, we also love you to sign up in our platform. Thank you.
Thank you, Frankie. If you'd like to connect with any of these lightning pitchers, please find them after the show, and a big round of applause. Thank you.
Thanks, Tony. So we have our panel, and we have some pretty well-known investors that are coming from Vancouver and beyond. The past 3 years have seen some really interesting record growth of companies having investment at the growth stage, and some strong growth in angel and seed capital, but not necessarily in Series A plus. And so I'd like to ask up Amy Ray from Vantage Capital, who will be moderating the session, and she can introduce the rest of the panelists.
All right. So I think I'm switching mics. I might put my phone here so I have a little bit of a timeline. So thank you, everyone. For those of you who do not know who I am, I'm Amy Ray. I am a principal with Vantage Capital, a VC firm here in town. Happy to announce we just closed our Fund 2 a couple weeks ago. So we have a $161 million Fund 2 ready for investment here in Vancouver and throughout North America. So we're pretty excited about that. And Sean and I put together this panel. We tried to get a good, diverse group of investors. So I'm hoping that's what we brought for you tonight. We're going to talk a lot about 2017, what our predictions are, what they're investing in on the day-to-day, trying to give you a little sense of, who are the investors in Vancouver, what are they investing in across the board? This is only a handful. There are other great investors in the audience, like, for instance, Jeff is here from BDC, who's not disappointed to not be on the panel tonight. I'm not exactly sure where he is. There we go. So, we can't have everybody. I asked for another seat. They said, no way. But I think this will be a pretty interesting and entertaining panel, and we'll try and give you different points of views. So with that, I'm going to give a very short introduction to each of the panelists. They have a great history, so please look them up, talk to them later tonight, find out more about them. But I'm not going to talk about their histories. I'm going to really spend our time tonight to talk about 2017. So with that, I'm going to bring up Eric Benson first. I don't know where Eric is. There we go. Eric. So come and join us. He is a general partner with Voyager Capital out of Seattle. So we're bringing him up here. Our American friend, which is so great to have you join us because we're going to talk a little U.S. politics a little bit later. So thanks for being a great sport. Eric is an early investor in technology software companies in the Pacific Northwest. He actually just announced an exit last week in a company called Skyware to Verizon, which is a drone software company. So thinking about diversity, I don't know how many investors have invested in drone companies, let alone already exited out of them. So that's great news. There is water behind us. So next, I'm going to invite up Manika. Manika, if you could join us. Manika's going to give us another diverse view. Manika Gautam is a co-founder at Campfire Capital here in Vancouver, backed by some Lululemon executives, investors in Franken-Oak locally. She's really invested in innovative consumer and retail companies. So although you're not investing in technology, you're really investing in innovation. And I think it's a nice thread that goes through the panel of, we're all looking for innovative companies, business models, branding initiatives. And I think Manika is going to bring a new perspective that we don't usually have at VEF. So welcome. And next, I'm going to invite up Wal. Wal Van Lierop is president and founder of Chrysalix Venture Capital, who many of you know because he's been on the scene in Vancouver with us for quite a while. Wal is an investor in sustainable industrial innovation and key enabling technologies, and recently was named 2017 Financial Investor of the Year Award by the Clean Tech Group. That being said, in the short conversations we've had, Wal does a lot more than just investing in clean tech, and I think it's going to be nice to have a perspective from you with not only software, hardware, robotics, and clean tech. So we'll try and get into that a little bit as well. And last but not least, we have Jerry Sinclair. Jerry, come on up here and join us. Jerry is Managing Director at Kensington Capital Partners and also the manager of the $100 million BC Technology Fund. Jerry is focused on Series A investments in technology across all sectors and also an investor in a fund of funds. So again, trying to give more of that diverse overview of the investors who are investing in Vancouver. So with that, I guess we can do a little round for our panelists. All right. I feel like I need to face you guys. So we're going to start off with predictions for 2017. So I'm going to go one by one. We'll have questions later that are a little bit more of a discussion. But for 2017, you know, what do you think is going to come? We're sitting in February. We're out of the gates. I feel like 2015 was super frothy. The U.S. companies were sitting with lots of cash and came down and bought a whole bunch of Canadian companies. I feel like 2016, we went into the year, you know, maybe a little trepidatious, not sure what the market was going to hold. And 2016 ended up being a pretty good year. A lot of funding still came out of 2016. And now we're sitting in February, and haven't heard a lot of predictions about 2017 and what gets you excited and what you're looking forward to seeing. So I'm going to start off with Eric to give us a bit of a thought of what he's focused on.
Does the mic work? Doesn't sound like it does, does it? No, it does not.
Okay.
Hi, again, my name is Eric Benson, and I'm a general partner with Voyager Capital. We're a Seattle-based venture firm. I've been doing early stage venture for 20 years now. Started out doing ad tech in the late 90s. Had a company, my first investment was a company called Aquanav that went public, acquired by Microsoft for $6.5 billion. And it was an online display advertising company similar to DoubleClick. Did a lot of marketing techs, a lot of SaaS, a lot of IoT. A couple years ago, sold one of my companies that was a video over-the-top server technology called Elemental to AWS, local hometown, Seattle-based company that many of you have heard of. You know, I think $13 billion now a year in revenue. It was actually AWS's largest and first major acquisition, just under $500 million. And then we sold another company to IBM recently. Just sold a company to GE, and just sold a company in the machine learning space, and sold a company just last week to Verizon, which was a company in the drone software fleet management space, commercial drone space that we think is going to be really
Eric, you're already on
huge.
the channel. We already know
Yeah.
how awesome you are.
So I was just trying to give an example of like some of the companies we invest in.
We want to hear your predictions.
So here are the predictions. Predictions are Snapchat IPO will fail. Number one prediction, Snapchat IPO will fail. You heard it here first. $500 million a year in revenue, $500 million a year in losses. It's being priced at 40% higher than the Facebook IPO. And Facebook at the time of their IPO had $1 billion a year in profits, not $500 million a year in losses. Twitter will recover, by the way. That's another prediction. It's a side prediction. Second prediction.
Is that because of Trump?
Trump has the loudest mouth of anybody I know, and he's obviously got a megaphone with Twitter. So I don't think it's because of Trump. But Twitter trades at 4x revenues. Facebook trades at 13x revenues. And the Snapchat IPO is going to be 30x revenue pricing. So, you know, figure it out. Second prediction. Amazon will acquire Sears and Roebuck, USA. Not the Sears of Canada. They're going to turn Sears' facilities into Amazon Fresh distribution facilities. I don't know if anybody's had experience with Amazon Fresh before, but I've been a customer since the beginning, and I can't remember the last time we went to a grocery store. It's phenomenal. Amazon Fresh.
Awesome.
Third prediction, VR, which I'm kind of on record with Wall Street Journal and other publications as being pretty negative on VR. VR will reboot because I think it's basically needs something to kind of rekindle the fire. Pretty much hardcore gamers are the only customer base of VR headsets, and for the most part, it's been a massive disappointment. Way overhyped. And commercial drones, obviously, I'm very positive on. So those are my 3 predictions.
Thank you. That's great. Okay. Manica, you're going to have some big shoes
Tough
to
act to
follow.
follow.
Yeah, sorry with that. But you're in a different space, so you can just start right over again.
Well, just a quick high level on Campfire. We just finished raising our first debut fund. As Amy had alluded to earlier, we're backed by a number of executives from a Vancouver-based company. I'm sure you all know Lululemon. My 3 partners in the GP are the former CEO, Christine Day, the former CFO, John Curry, and the former head of business development, Brooke Harley. So we invest in early stage consumer and retail companies, all of which leverage technology like every other industry, and real purpose. Mission, vision, there we go. Okay. I'll just jump into my 3 predictions. They're not as contentious as yours, but first and foremost, when we started Campfire, we set out to really back purpose-led vision, mission, companies that had a brand that supported more than just the product that they were selling. So what do you stand for as a company? When we first started, I didn't see too many of them, but coming into 2017, and especially throughout 2016, we've been seeing every company almost stands for something. Every company coming out in our industry, many of them are certified B Corps, where they donate a certain percentage of their corporate profits to philanthropic initiatives. And so we're seeing that way more in the early stage disruptive space as a way of differentiating your brand from another and really going after and attacking the market incumbents. My second prediction is that you're going to see way more corporate strategic activity in our space. One of our thesis elements is that the market incumbents, like the Sears and the Nordstroms, are looking to the early stage space for innovation. Gone are the days where they're investing heavily in R&D internally to grow platforms, but they're starting to look for that growth in the early stage. And 2016 saw the first unicorn exit in our industry. Do any of you know the company called Dollar Shave Club, acquired by Unilever for $1 billion? Not profitable, but still happened. And I think you're going to see a whole wave of new companies like Dollar Shave Club emerging disruptive and being acquired by market incumbents. My third prediction, I guess, is somewhat more contentious, but I think given the funding in our space, marketplace platforms have been heavily funded, and we find as a thesis at Campfire that it's difficult to build a brand around a marketplace. So you're not selling your own product, you're not controlling the distribution of your own product, you're simply selling other people's products. It's really tough to compete and go head to head with the Amazons. We've already seen here in Vancouver very recently the failure of a marketplace platform, and unfortunately I think we're going to see several more of those downfalls in 2017. So somewhat contentious for my last one.
Great. Well,
Thank you. I'm not going to stand up because then you guys see how much smaller I am than Eric when he stands up. So at Chrysalix, what we do is sustainable industrial innovation, and we are focused on today's true enablers of innovations for large industries that are going to tremendous transitions, like oil and gas, the chemical industry, the mining industry. A good example is our portfolio company here in town, MindSense, which, with the help of sensors and artificial intelligence, very significantly improves the bottom line of mining companies. What we will see in the resource-based industries is that, on the one hand, they will bounce back in 2017. On the other hand, what we will see is that protectionism will put globalization on the back seat for quite a while. And that is going to be a problem. At the same time, it can be an opportunity. It's probably going to be a problem in the US. Somebody said 4 years. Probably going to be a problem in the US. In smaller countries and in Canada, it will be a huge opportunity to press the innovation agenda as fast as possible. In some of these industries, well, Mr. Trump thinks that he can bring back manufacturing to the Midwest, which of course clearly is not going to happen. In some of these industries, people will discover 4 years from now that others own the industries of the future. So that's a very important thing to think of. So resource-based industries will bounce back. We will see an incredible opportunity for innovation in small countries. And in particular in Vancouver, we have a tremendous opportunity. I was so pleased to see the Financial Times today. How many people of you saw the Financial Times today? And you must have been extremely pleased. I'm really surprised that the one and only day that Vancouver gets a whole page on the tech community in the Financial Times, nobody in this community has read the Financial Times. So, shall we talk about alternative truths or fake news? I mean, as some of you know, alternative truths that was the Oxford word of last year. Probably Kelly and Connie is already in January with alternative facts came with the new word. But no, so the Financial Times had a tremendous article on the opportunities for Vancouver. I mean, it featured the ongoing wave of high-level people from Silicon Valley that want to work in the fast-growing tech community in BC. And that's great. And it gave a number of examples of companies that already have moved. And it gave a very clear indication of that it actually is very cheap to develop early-stage companies here. So I think that the last forecast is Vancouver really will flourish in the tech community this year.
Hi, it's my turn at last. Hi everyone, I'm Jerry Sinclair, and I'm the new. Is it on? Is it on? Am I on? Yeah. Okay. How about now? No? There we go. Nope. There. Oh, talk into it. Okay. All right.
Thanks, guys.
So, as I was saying, I'm the new managing director with Kensington Capital, and we're managing the BC Tech Fund, a $100 million fund focused on growth capital, fund of funds, and direct investing in companies, Series A companies across all 4 sectors. I would also like to introduce to you the 2 newest members of our team where we now have an actual office. It's amazing because it sounds like the Tech Fund has been around forever, but it's really only been here for about 4.5 months. And we now have an office, we have furniture, and we have 2 new members, and please stand up. We've got Alex Gertan and Dylan Fries who've joined us. And we've already made 2 investments, and stay tuned because we've got a number in the pipeline. So I'm going to go way out on a limb for my predictions for 2017. My first prediction is that Uber will come to Vancouver finally. That's really out on a limb, I think. And also perhaps we'll get Amazon's Echo. Alexa will also come to Canada. And it's amazing, you know, we're talking about the future, and we still don't have Uber or Alexa, but that's another story. Some of my other predictions go along the lines of the other panel members. While I think that the resource industries and other industries are really going to bear out Mark Anderson's prediction many years ago that software is eating the world, which he recently changed to computing is eating the world, and we're really moving out of the traditional technology industries, and software computing is becoming inserted across all kinds of sectors. And we not only do we have fintech and health tech and ed tech and agri-tech and reg tech and sex tech and food tech and any other tech, car tech you can imagine. You can see that particular trend, and I think that's going to be continuing. Mining tech. So we'll see a lot of that. And my own favorite, because I'm constantly trying to be in two places at once, is this new term that's been kicking around, that it keeps coming up all over the place, which is digital twinning. And you see that not only in terms of the models of complex systems like plants or space stations being modeled with a digital twin, but also in terms of people being more and more often trying to be in two places at once. So whether we're going to see improvements in terms of teleporting, or in terms of telehealth with robotics, remote surgery, or again in the porn industry, we'll see a lot more digital twinning.
Awesome, thank you. All right. I'm not gonna lie, I started off with predictions, so I'm not sure if we can keep our conversation up, and thanks for bringing in porn industry on the panel. I really appreciate that. Maybe we could bring that up in the last question, that'd be great. I'll try not to have my laugh in the microphone. So next question, just to give the audience a sense of exactly what you guys are investing in and seeing day to day. Predictions are a good high level for 2017. I'd love to hear, a couple minutes from each of you of when you open up a door to sit your bum down at a meeting and the people you're talking to, what does it look like? Like, who are you talking to today? What company, maybe not companies, but what industries are really exciting for you? And what are you seeing kind of February 2017, a little bit more tactical in your day-to-day? Maybe it's not the stuff you wish you were seeing, but the stuff that you actually are seeing. And I'll start back with Eric again.
Great, thanks. So we're software investors and have been for forever. And probably 3 or 4 years ago, saw a lot of machine learning AI companies and invested in half a dozen of those, and we've exited half of those now. I think now is a great time to be exiting the machine learning space, which, for those of you that don't know, it's about a 35-year-old business. AI has been around for about 35 years, and it's been through maybe 3 major waves, and this is the exit wave. We're going to approach the trough of disillusionment, if any of you know what the Gartner hype cycle looks like on that space. So exit now or forever hold your peace. So we're very excited lately. We're seeing a lot of companies in the esports area. I don't know if it's a big deal up here. The Pac-12 down in the United States just authorized esports as a sport. So this is teams of people, college students playing video games for money in tournaments. Largest company in that space, Twitch, was acquired by Amazon for $1 billion, actually $950 million. And there was about $1 billion or $2 billion worldwide is what the forecast is for that industry in 2017. So we're seeing a lot of kind of esports platforms, esports cloud routers. We're seeing there's been a number of fundings recently, just like in the last week in that space. So I wouldn't be surprised if there's a number of companies in that space here, given your strong legacy with EA and other video game companies, as there is in Seattle with Nintendo, Microsoft, and others. So we're seeing a lot of vertical SaaS software companies still. It seems to be kind of the thing that a lot of people are doing, not much horizontal SaaS, so specific industry SaaS opportunities. And I think 2017 is going to be a great year to invest, and we're seeing probably in each of our markets, again, we invest from San Diego to Vancouver, probably see 100 opportunities, 100 opportunities that are good opportunities in each of those regions, probably do 1 out of those 100. So probably do another 4 or 5, maybe 6 new investments this year.
How often do you come up to Vancouver from Seattle?
Somebody from Voyager is in Vancouver every other week. So one of my partners is at Capital Mission later this week, and then BC Tech. I have another one of my partners is up in 2 weeks, and one of my partners was here 2 weeks ago. So we have 5 partners on our team, again, mostly in Seattle, but some in Portland, some in Silicon Valley. and we kind of share the load of Vancouver, no one partner. We made a couple investments up here, very small. I think our largest investment up here is Foodie. Any of you guys know Foodie?
Yep. Great, thank you. So similar to you, we only invest at Campfire in our industry, which is consumer and retail. We invest at the Series A level, which means many different things to many different folks, but for us, it's a business that's $2 to $5 million in annual run rate net sales, typically in the second or third year of business. One of the things that we see, the first thing that we look for is brand. We're brand players. We're looking for a breakout next type brand, vertical brands only, so businesses that control the manufacturing of their own products, sell through their own channels. Typically, we see that online first, direct to consumer, and then we start seeing stores. So Frank and Oak did it. Warby Parker has been very successful at building an omni-channel approach, building stores physically alongside with the online. So that's what we invest in. One thing that I have started to see, which is really interesting as we look to back these purpose-led companies, is version 1.0 of giving back was like a one-for-one type model, which a lot of people do now. You buy a pair of socks, you give away a pair of socks to a homeless shelter or person in need. Warby Parker did it with the eyeglasses. A model that we've been seeing recently, which is next level, I think, is an all-for-all model. So this is a model whereby there's an example out of LA, a company called Every Table. So do any of you know Pret-a-Manger, the grab-and-go concept out of the UK? So similar to that, but you'd have in an affluent area these meals that are being charged for $7 to $9, but very transparently you'll have a sister location in a Compton or some in LA that's not as affluent, where they're charging $3 to $4 for those same meals. So it's the idea of giving back socially responsibly, but in a way that it's supporting your own community, your own backyard, and it's an all-for-all model. So that's something interesting that we've been seeing that I love looking at when we're looking at investments.
Well, while on the one hand we look at technologies that can have a major change in old industries or disrupt the society, to give you a few examples, we are looking at new DC technologies for long-distance power lines, where currently the Chinese are leading, and they're even thinking of bringing wind power from Western China to Europe. Or last week I was in Iceland, where they have thermal power, use it or lose it, and they are starting to think of building a link to Europe and basically become the clean energy baseload battery for Europe. Very interesting, huge impact. On the more esoteric stuff, we are looking at passenger drones. You may have seen the article written by my colleague Joe Blair in TechCrunch a few weeks ago on the fact that flying cars are out, but passenger drones are probably going to be here. But primarily, we start looking with what are pain points and opportunities in old industries. That's what we focus on. We focus on what are breakthrough stuff in big industries that do not just result in an incremental innovation, but really change the platform. Every CEO of every Fortune 500 company, PwC just did a survey, thinks that sometime in the next 10 years, somebody else from another industry will come to their industry and change the way in which they have done things for the past decades. So we have a very active engagement process at Chrysalix with all our investors, where we focus on what are their pain points, what are the opportunities we see, and with that, we try to find the best solutions worldwide. Now, one last thing I want to remark is that many of these best solutions, more and more, come from universities all over the world. And for that reason, we recently, in the past year at Chrysalix, added our deal sourcing with a global brain trust of 30 universities in the area of artificial intelligence, robotics, sensors, IoT, and machine learning. And we get more and more of our deals out of challenges we set out as requests for proposals in that network. They're structured as X prizes. And it's very important to tap into that. one of the reasons why it is so important is that more and more young people in universities don't want to go to old industries any longer. I mean, more than 75% of the typical students from Carnegie Mellon to MIT to TU Delft in the Netherlands to universities in Asia want to do a startup. So it's very important to tap in that rainforest.
Interesting. All right.
So, as you may be aware, the BC Tech Fund is primarily a fund of funds. So 75% of the fund is dedicated to already existing funds or new funds that are currently raising rounds. And so we see, as you might expect, a number of VCs who are raising funds, and we're really happy that we had a chance to already invest in Vantage. And as Amy's just mentioned, Vantage has now just closed their round for, I mean, quite remarkable, $161 million, and I think that's very cool. We're really pleased to be an investor. We're also looking at a number of other funds right now, and as I said, we'll have some hopefully announcements, well, very soon. And so it's I can say very confidently that we will have invested across all four sectors that are the requirements of the BC Tech Fund, from high tech to ICTs to digital media, clean tech, and also life sciences. 25% of the fund is direct investing. And we're seeing a lot of companies. There's a huge demand for funding right now in the province. There's been a lot of hype around the fund, and a lot of companies think that it's for pre-seed companies. And so we've been swamped by a deluge of companies saying the BC Fund is BC Tech Fund's here, and we got a note from somebody saying I live in Saskatchewan and I'm building a robotics company. I'll move to BC if you give me money. Those are we had a few of those. But I guess what really excites me is the quality of the companies that we're seeing, and a number of them have been operating in stealth mode. I mean, it's quite remarkable to see the number of companies that have bootstrapped themselves to a growth stage. They have great customers, product in the market, driving more than $1 million in revenue, and they've never raised a round of financing. They've been bootstrapping with angel funds or their own money, and they're really impressive, and it's happening in British Columbia, and also it's not just in Vancouver. There's really hot companies in Kelowna and in Victoria as well. So that's really great, and we're also seeing some pretty interesting seed companies they're not quite at Series A, but they're really exciting companies that we want to follow. So all in all, I agree with the Financial Times that Vancouver is really the place to be. I know that Toronto is kind of moving up in the space in terms of attracting outside investment from the U.S., but I have big hopes for Vancouver. I think we can continue to lead Toronto, and I feel like we ought to, and we will. And yeah.
Great. All right. Well, since you guys want to talk about immigration, so talking about the immigration ban a couple weeks ago, there was a federal judge in Washington State that put a temporary hold on the ban, which barred all refugees as well as travelers from 7 predominantly Muslim countries. Trump called the judgment ruling ridiculous and vowed to be overturned. I'd love to hear some of your personal stories that have come out of this. Eric, obviously, being from the U.S., I'd love your view on it. I swear there are Trump supporters in Canada, so whether you are or you're not, it's just an interesting conversation to have and how it affects the technology scene. We have a portfolio company down in the U.S. We got an email from the CEO saying out of 104 employees, 89 were U.S. citizens, 8 had green card visas, 3 had H-1B visas. Of these, 2 green cards were in the process. 4 OPT visas, which are former graduate students, all of which we're sponsoring for an H-1B visa. So of his workforce, 15% of his people were not from the United States. 30% of his engineering team were made up of these people. He sent a note to the board members asking them if they were so inclined and had an opportunity to advocate against the immigration plan to please do so. So my question to you, to everyone, and we can have this as more of a discussion, is, what are the concerns? What are your personal stories that you've heard? Do you think this is going to shake out? Do you think it's overhype? Any steps you're taking towards trying to open up immigration here? Again, I'm totally putting you on the spot, Eric, so I really appreciate you being on this panel, as all of us do. But yeah, it would be interesting to hear everybody's insight.
So, Trump is a megaphone and a hype machine, so pretty much it takes a little bit to see the forest of the trees on him. I would say, listen, overall, getting through immigration, getting visas for our companies and our employees in our companies has always been difficult. It's not a slam dunk. I just recently, in November of last year, moved a management team from Germany to Seattle. It's in the video OTT space, similar to the company that I sold to AWS, Elemental. And it was, they got O1 visas. I don't know if you guys know what those are. Basically, if you're an expert, industry expert on a very specific area of technology or innovation in general, you can apply for an O1 visa. And that, again, this was pre-Trump, PT. And so I want to say it took us maybe a month and a half from start to finish to get 3 of the founders, O1 visas. Which, again, was longer than I thought, but not quite as long as maybe it is today. Our engineers in our companies, most of our companies are, when we're investing in them, they're, 3 people in a business plan, or 5 people, or 10 people, not, thousands of people. I think my business school classmate, Andy Jassy, who runs AWS, is having a little bit more of a tough time. He hires, I think, somewhere around 5,000 engineers a year. And I think many of them come from many of those countries that you listed off before. So he's got, I think, 1/3 of their workforce turns over every year. So they have a little bit of a problem with keeping employees there. But it's a pretty tough place to work from what I hear. So I think, the companies like AWS and Google and Facebook and others will make sure that whatever does come back eventually isn't going to be harmful to them. So I applied, kind of the Washington Attorney General for, kind of taking a stand, and so far it's working out.
So first of all, I don't know if this is a good thing or a bad thing, but nothing would surprise me, is what I've learned in the past few months. Insofar as our industry is concerned, immigration hasn't been that much of an issue with our portfolio companies. I think insofar as the new administration, what we're most concerned about are the import tariffs. That being said, regarding immigration, just because it's a huge topic, inclusiveness is a big theme of our generation today. And companies that don't stand for inclusiveness, and companies that aren't as vocal about stating that they are for inclusiveness. I mean, we saw it recently with Uber, the Delete Uber app, or on Twitter a couple weeks ago, right? That was the incident out of JFK, and everyone, for whatever reason, thought that Uber was kind of with Trump, with the, and sort of facilitating these Uber rides at a discounted price and not helping the taxi workers, many of whom deal with immigration issues. Anyway, so that in itself, from a consumer perspective, was very anti-brand, off-brand, and you saw, I think, 200,000 people delete the Uber app. So that's how I think it shows up in our industry. Unfortunately, we're not, or fortunately, we're not as, it's not as much of a concern as things like the import tariffs are for us.
Well, I already referred to the Financial Times article on immigration and how Canada can benefit, but I think immigration.
I told you to hold that for question 3.
But why I pulled it out, because immigration is just one element of a society in disarray. There's a lot of anxiety. Globalization is on the back burner. Bert Comstock, the COO of GE, will probably in the years to come will take over from Jeffrey Immelt, said recently, large companies like GE have increasingly to become local and global together. Glocalization is the word. I mean, you have to have that's the word that is being used, glocalization. There's a lot of talk currently about taxes. I mean, what I'm referring to is immigration is one element, but people are looking at where is the society going. Maybe the balance of capitalism as we have known it has gone a little too far. Let's talk about taxes. Companies like Suncor still pay 37% taxes. Apple pays in the low 10s, and Starbucks doesn't pay anything. You cannot run a society on that. The discussion has started in my area on taxes for robots. Taxes for robots. I mean, there is a lot of angst in the society. And we in the innovation area are the leaders that have not just to come up with the new technologies. Of course, that is what we live day to day. But we also have to realize the context in which they will form the society of tomorrow.
Well, hard to believe that the Trump cloud has a silver lining, but I suppose that we could say that Canada will benefit from having access to more talent than we did before, and for that I celebrate. I also think that the tech community here in Canada, and Lauren was one of the leaders, were very early to put in a petition when the first ban came out to ask Trudeau to accept those U.S. people from the U.S. to come to Canada. So I think think about what can we do as a tech sector to welcome immigrants, support immigrants, and I also think there's also another factor at work that might be surprising. For instance, some of you may know about the situation that's recently developed at Shopify, also at Amazon, where employees are protesting practices that are racist, or they privilege certain anti-Muslim or for instance, Shopify, it's come out that Shopify hosts the Breitbart store, and it also hosted the Hillary Clinton store and the Trump store, and the employees at some employees at Shopify were very upset, and so they had a very long town hall meeting, and basically the CEO felt very strongly that Shopify had to hold to its principles of free speech, and that anything that was legal, as long as it was legal in its jurisdiction, would have the right to have a store on Shopify. But I think we're getting to the point, and as you probably are aware, a number of employees anonymously went to BuzzFeed to expose that the Breitbart store was on Shopify, and the management refused to remove it. So we're now coming into a situation where we have two principles: free speech and racism. And how do you actually reconcile them? And where are your principles, and where are your beliefs, and what do you stand for? And I think it's not simple. So I just wanted to throw that one out. It's some decisions about where are our values, what do we stand for, and it's time to actually stand for them now.
Awesome. That was great, guys. Okay, so this is my last question before we open up to the floor. So if you guys have questions, I probably should have said that at the starting of the night. We're going to open it up for 15 minutes to take some questions from the audience. But we're going to bring it back to Vancouver because this is where we are. And, you know, I want to think a little, kind of ask you guys from your time here and investing in Vancouver, you know, some pros or cons about Vancouver, maybe some weaknesses, some strengths, what you're seeing. We're all investing here, so there's got to be some good strengths, but also what do you wish that we were maybe stronger at, or we can maybe do some better, I don't know if it's like bringing in talent or bringing in better education or what it is, but, you know, how do we make our community stronger and make our tech market even stronger than it is today? So, you know, I'm thinking about the companies that are in Vancouver now. We have some really large companies that have done very well for themselves. We have Sierra Wireless, we have Lululemon, we have Plenty of Fish, we have Slack. The game changers that, you know, I think we're super proud of in Vancouver that hopefully will be some game changers. Jeff, I'm calling you out again on, you know, D-Wave and General Fusion and Zymeworks. And then we have a lot of growth companies around town with the Hootsuites and Build Directs and Vision Criticals and Mobifys that we're seeing, and then a ton and a slew of startups coming out with great ideas that are, you know, pulling together teams of 2 or 3 people. Our universities with, you know, CDL coming to UBC. Talk a little bit about what you're seeing in Vancouver, and we can start any which way you want. If Jerry, you want to start, or whoever wants to start.
I think Vancouver is a great city for early stage companies. It's wonderful. And by the way, with all the tax deductions and soft money facilities we have here, there's probably no better place in the world to do early stage. It's absolutely fantastic, great strength. Now, on the other hand, when it comes to growth capital, and I don't mean then what the panel was introduced on, seed and Series A or Series B, but I mean Series C and Series D and real growth. We have 9,000 little companies in this in the Lower Mainland. 9,000 tech companies. 8,000 you probably have never heard of. Some of them I have been on record to qualify them as occupational therapy. There are too many subsidies and soft money sources to keep all these companies that a VC would have culled alive for 10, 11, 12 years. So if we could ensure that out of that group, let's say the B plus companies would also make it to the A plus, that would be great. So we need a strong initiative to really scale up out of that pool of 9,000 terrific companies. That is what I see as the great challenge for Vancouver.
I would say Vancouver, especially in the last 2 years that I've been here, I'm seeing it more and more. It's a pool of retail talent. So back in the day with Arc'teryx, and then obviously Lululemon or Aritzia, the rise of these retailers here, what it's created is a pool of talent that's come from everywhere. The best of the best were recruited during the Lululemon heyday. I'm proud to count many of them as our investors. And so I think what's great about consumer retail in Vancouver is that you've got a great pool of talent that's here already, that's grown up in that evolution. So we're seeing a lot of really interesting startups because of that talent that are breaking off from the Lululemons and the Aritzias to start their own businesses and become disruptive to the market incumbents that they left. I think one way that we could continue cultivating that, and Chip and Shannon Wilson have done it, is schools of design, and to continue attracting talent at even an earlier stage rather than just waiting until the company gets big enough and is attracting the best and brightest from the larger, the Nikes and whatnot. So I think that's something that our industry could continue to do, and it's already started to a certain extent.
So one of the things that we see in other communities, again, we have a broad mandate to invest up and down the West Coast. I've done some investing in Orange County, in San Diego, San Francisco, obviously Bay Area, Portland, Oregon, Washington, and a few deals up here. We tried to do BitStew, we tried to do Bench, but the world is flat and competition came up from the valley, and in both cases actually, and locked us out. So that's good for those companies. I would say the biggest thing that we see kind of is the proximity to university system and low cost, relatively low cost of employment plus facilities. So one of the things that we do is we look at in Seattle, it costs us about if you take the total dollar cost per month of a startup, a pre-revenue startup, let's just say, and divide it by the number of employees it has at that particular point. In Seattle, on average, it's about $15,000 US dollars per employee per month to build a startup. In Silicon Valley, it's about $30,000, about double that. Portland's about $10,000. So it'd be interesting to know kind of what it is here in Vancouver in adjusted dollars. One thing I just as an outsider note is real estate here is like way more expensive than in Seattle. So I wonder whether that kind of crawls over to the commercial real estate market and the employee costs and so forth. So maybe Victoria is a more interesting place to look for startups. I don't know. So that's the first thing. Second thing I'd say is, the things that we saw when we started going to Portland, Oregon, I don't know, maybe 20 years ago, but it didn't really come on to its own until about 10 years ago. And one of the things that helped it was getting the local businesses, the larger businesses, publicly traded, larger businesses, privately traded or privately held, to become customers specifically of the startups in that particular region and be the first customers, be the lighthouse customers. So you can get references in that particular beachhead or vertical. And I don't know if it was done on purpose, but it seemed like many of the business leaders of the largest companies in Portland, and again, all the way from Intel to the large insurance companies to large healthcare companies, all very, very specifically focused on buying that first product from that really early stage company. And if there could be such a effort here, maybe it already is happening, I don't know. But that really kind of ignited things in Portland, and now we see probably, there's probably 10 venture-backed companies coming from Seattle or Silicon Valley or Boston, VC firms backing Portland companies a year, from zero or maybe one a year, 10 years ago.
Yeah, I've been working in the community building side of the technology industry for a number of years, and trying to do various things with government policy, advising, and tech reports and strategy reports on getting government to focus more on building up the tech sector. And I see that this year in particular, there's been more government funds both at the federal level, provincial level, and BC level in terms of focusing on the scale-up problem. Okay, so there's obvious difference between companies in Canada and in BC in terms of their ability to scale and to grow, and I think that's the word scale up is everywhere. There's even a fund called Scale Up now, as you all know. So the point, I guess, is that's quite interesting is the group that was formerly called Compass, that's now called a startup Genome, has been doing some research on the big exits in the tech space, and the difference in terms of the size of the exits in Silicon Valley vis-a-vis the rest of the world. And after Silicon Valley, LA and Boston and New York do very well. Canada's way down, not at the very bottom, but close to the bottom. But some interesting work they're doing is, why is Berlin soaring? Why is Tel Aviv doing so well? Why London? And Canada is still kind of turf down at the bottom. And one really interesting piece of research that came out of their data is a differentiating factor is how quickly the companies move out of their own marketplace, and they know they have to be in the United States. They've got to be down in Silicon Valley. They've got to have customers in New York. They've got to be at those meetings, and they leave their home turf. And it's really the local, what did you call it? Localization. They build the technology in their home base, and then basically they're out selling and marketing globally. And I think that we don't have enough of that here yet. And the companies that you mentioned all managed to get out there and become global powerhouses. And he mentioned, interestingly, that one of the success factors tends to be how quickly a company outside of the U.S. hires a U.S. VP of sales and another VP of marketing. I know that we did that with our own company. It turned out to be a good strategy.
So I'm going to open it up to the audience. Are we just going to run these microphones, I guess? Just speak. I don't know if we're going to be over here. I'll be around here.
Thanks. Great panel, by the way. One of the things I wanted to ask is, we don't talk enough about education. I'm sorry, maybe politically incorrect. We always talk about bringing in people from other countries and making sure we have a nice channel for them. Aside from the fact that, of course, we're creating a brain drain for those other countries, when we don't have enough seats in our college, when our colleges are turning away the kids that want to be the engineers of tomorrow, how do you think that affects the Vancouver as, an emerging market in the IT and tech space?
I'll take it. I think you're right on, and I think that we need to have more programs. I think we need to actually start with kids in kindergarten learning how to code, and I think that the BC government has started to get that idea as well. But there's no question about it that education is the key, and as much support as possible for education in the STEM, science, technology, engineering, and mathematics is really important, as well as education in the softer topics as well. I'm passionate about education.
Yeah, I think this is very important, and it's not just university education. Who of you have heard of the slogan, "The world needs more BCIT"? I mean, McKinsey did an analysis 2 years ago about that type of skill building that is really lacking all over the world. And they came to the conclusion that BCIT is actually one of the leading facilities in the world where it comes to that middle management growing of capabilities. And it was actually Dominique Barton, the global leader of McKinsey, who came up with that slogan, "The world needs more BCIT."
I'll just offer a bit of a contrarian or another comment on it. I mean, personally, when I went to U of T, a third of my class were immigrants, and they were the best and brightest from their countries. And I don't know if it's a bad thing that you have students, this is 10 years ago for me, 15 years ago, but competing against seats in the same way that we should be attracting talent, from an immigration perspective that are the best and brightest from their countries. I think it ups our game. So I agree with attacking it early on in terms of giving our children the opportunity and educating them so that they have the ability to get into that seat and compete. But for the moment, I think it ups the rest of our games as students, as I would say 15 years ago.
Hi there, really great panel. Thank you all for setting time aside this evening. More and more I'm seeing companies that have some engineers here, some engineers in the States, maybe some engineers globally, really dispersed engineering teams, and sometimes even engineering teams that are completely dispersed and with no central hub, and we're not just talking about that. So in the context of that, sort of the opposite of immigration, when you're looking at investing in Series A or even later growth stage companies where the model, and I think a lot of the model is being for acquiring companies that have hearts and souls and offices, what do you guys think of investing in companies, and how does that impact valuation, or does it impact valuation for companies that have highly distributed workforces?
Yeah, so good question. We have, I want to say, 3 portfolio companies currently that have teams in Canada, from Quebec all the way over to BC. So engineering teams, I think, can be somewhat distributed. Now, they're clustered all together. They're not widely distributed. Historically, early stage venture firms or early stage VCs will say most of the team needs to be together. What is most? What it changes from VC to VC. In all cases, we think that the marketing person, the marketing people, the CEO, the finance person, many of the engineers should be together and not dispersed, at least for that initial kind of product cycle, product market fit. In almost all cases, the head of sales is not in the same place as the rest of the company. We do searches. I'm probably in the middle of right now 3 executive searches. The VP of sales can be sourced, pretty much anywhere in North America, and we can continue to have that VP of sales live where they're currently living, generally, unless you're building a strong inside sales force where you need a leader in the office. But I think dispersed startup teams is challenging, and generally not something that we, as institutional VCs, will back for the most part, other than sales. That's my perspective. I don't think it's going to change.
Well, I think it's going to change a lot. I think that we are going to see totally new business models all over the world moving forward. I mean, in old life, I was with McKinsey, and this was in Europe, and we would bring together the best possible teams for the purpose from all over the world. And then I worked for a long time in a large oil and gas company, and that was more traditional. But what I see today is that startups, young companies, attract the best possible team, and nobody cares as long as the work gets done. It is really, and I think that the evolution to the virtual workplace is about to explode. And it will not just be in small companies. Like to quote, I mean, I just read this article by Beth Comstock of GE. To quote her again, she said, increasingly, GE will have to organize its divisions as swarms of tribes that come together and for whatever they need to do. So I'm in my own company. I'm very happy with people working virtually as long as the work gets done. Sometimes initially you have to bring them all together, but as soon as people know each other, you can do a lot virtually. So I think that business models will change tremendously in the years to come.
Surprisingly, I find myself agreeing with you all. And I think we're in a hybrid space. I mean, telework has been a long time coming, but I mean, you look at how many people really are working from home. You never know who's in the office and who's not in the office. I remember when we were running Encompass, we had a distributed company with sales and marketing in the Valley, and we had a number of sales offices, and we were already using technology. So I would be, and we are right now, the person's in the next office, and we're communicating with them with using text or email the same way that we communicate across the globe. So I think there's no question about it. Having a remote engineering team or any team is a challenge. But even having them in the same office is often a hell of a thing too, given personalities and people issues. So I think we get better at it. I think it takes a lot more work but it's certainly the way of the future. And as I said earlier, in terms of the improvements in teleportation technologies, and it's not necessarily science fiction anymore about how you can actually teleport your presence across the world and work very effectively.
The Globe and Mail had a contest once to define a Canadian, and somebody said it was somebody who crosses the road to get to the middle. And I'm Canadian, so I wanted to say that. And the question I have, and I've company of 20 employees, and we do over $1 million in revenue. We've grown, and I really do ask myself if I'm too conservative, if I'm moving too slowly, whether in the global marketplace we really have the ability, and we have the ability as a company to step on the gas. And knowing that you talk to businesses across the border, and you're seeing businesses that have to compete globally, I'd be interested in your perspective on whether when we have an opportunity, what's going on in the world right now, we can step on the gas.
It's a good, it's a difficult question to define. Some of, in Seattle, for instance, 20 years ago, people would say the same thing about Seattleites, Portlandites as well, right? They'd say they're incrementalists. They don't want to build, the next big thing. They just want to increment technology one step beyond, right? And I think there's a couple of things that drive some of the change in people's thinking on that in each of these communities. One of the things is exits. So as big exits come to the whatever region you happen to be investing in, those people that are driving those businesses, the founders of those large exits, are kind of mouthpieces for what can happen in that community and what you can build and how you can potentially build a revolutionary type of company instead of an evolutionary type of company. Second thing I'd say is that venture-backed companies are probably one out of every 1,000 companies that are started in the United States. I mean, it's a very small percentage, right? I mean, so I founded a company actually that's in our portfolio that focuses on the other 99 companies that won't ever get venture backing. It's a company called Lighter Capital. They're the largest or second largest SaaS investor in the United States. Last year, they did over 100 deals. They'll do over 200, maybe 250 this year. And again, they're targeting companies that are between $500,000 and $5 million in revenue, with a investment of between $200,000 and $1 million. For companies that, again, don't want venture capital, don't want people like me on their board, potentially firing them, don't want the control that we bring, and don't want our advice, frankly. And so there are lots of opportunities for those types of companies to grow, and obviously Lighter Capital is one of those. So those are two of my comments.
Yeah, I would agree with your second comment, especially. I think with the wave of entrepreneurship that we've witnessed in the last decade, 2 decades, I think there's a number of companies that calling them not venture backable is not the right way of articulating it, but I think there's a number of companies that aren't going to be growing at the pace that would warrant a venture capital investment, and that's just what happens when this wave of entrepreneurship has started, and we're in the middle of it, and I think it's just going to keep getting stronger. I think it depends on your business. I don't know too much about your business other than it's $1 million in sales, but congratulations in of itself. And I think it depends. But to your point, not all companies need to be venture backed.
Your question is extremely important in Canada. The conference board for, I think, the past 10 years has consistently given Canada an F on innovation. Now, you guys are the innovators in this hall, and you may look at each other and say, that cannot be true. Yes, it is true. An F for innovation. Of course, we have still most of our economy dependent on resource-based industries. Last time I looked, more than 55% of the TSX is what that is. Old industries. And some of you may have tried to innovate these industries. And if you could, it could have a tremendous impact. And so where Canada has to step it up is try to ensure that we get innovators to these traditional industries, because that could really help our country tremendously. It could pay off in a double way. It could help maximize the value of the resources we have, and if we don't do this, we cannot build the technology industry for that sector, and we will become buyers of technology for our resource-based industries instead of sellers. I rather have a Canada where we also are a seller of technologies on behalf of the resource-based industries. That's our opportunity. That's where we have to step up.
So, my question to you is, why wouldn't you put your foot on the gas? I mean, you got to do it, right? This is, if not now, when? It's go for it.
Awesome. Okay, we have time for one more question. I think we have a microphone behind. Sorry about that. We have 5 more minutes, I think 4 more minutes on the clock. And then we can get up and chat. Apologies.
I'm a successful serial entrepreneur. I've succeeded, I failed, I've succeeded more often than I've failed, luckily. And I'm currently co-founder of a positive disruptor in my particular industry. I don't come from technology. I'm learning about it, reading voraciously, attending things like this to learn that half of what it takes. And a big part of that is learning about what each of you do in the world of VC. And what I believe I've found so far is that before I am mature in my company to the point where I need to chase growth capital, I need to find seed capital, and it seems to me that that's the hardest money to find. If we're going to grow an industry here, shouldn't seed capital be the easiest money to find? And if so, how do we do that?
Okay, you know what?
I'm a dual citizen.
I'll
I'm half
take this one
Canadian, so
because-
do I apologize?
I'll take this one because I'll use my example in raising Campfire. We were small. We were a startup in of ourselves. My co-founder and I lived together for the first 6 months because we had no management fees yet, no capital to manage. Where we found ourselves successful in getting those first few dollars, we're identifying folks in our industry that could see the opportunity we saw because they lived and breathed the space and grew up within a breakout retailer. So when we talked about trying to find those companies and knowing what they stood for, do you know what I mean? The conversation was easier. So I think insofar as looking for where that seed capital comes from, I would seek to identify not institutional capital, but angels, which is what we did. My first $10 million that we raised at Campfire came from 51 individuals. I have 103 investors. It's crazy. But my point being, just likening my startup to your potential startup and seeking that first check. Look for people that are in that industry, that see what you see, and that have experienced success doing what you say you're going to do.
I actually am not sure that seed capital is the biggest challenge. I think that there's a very active angel community here, more than I see in many other places in the world. So I think that there is quite a bit of seed capital. That's one of the reasons why we have 9,000 little companies. It's much more about, when companies hit the second valley of that, they have proven out the technology, but now what? In areas where, like Vancouver, you have a small market. Now you have to go abroad. So you have to attract money that understands where you need to go. So I think that growth capital actually is the biggest challenge in Vancouver, in my opinion.
Yeah, I agree with that. One of our sayings we have internally is nothing ruins a good story like numbers.
Well, I have mixed feelings about this. Obviously, the growth capital is extraordinarily important if we're going to get to the large exits that we're talking about. But if you don't have enough seed companies, if you don't have enough startups in the ecosystem, you don't have enough pool out of which the growth companies can grow. So, I mean, obviously, you want to have a very healthy ecosystem with sufficient number of seed companies that grow into Series A that then grow in, because there's a big drop off at every level, right? And so if you only have a tiny pool of startups, of seed companies, then it's really hard to get to the to the big fish.
Great. Okay, thank you. I just want to thank my panelists. Thank you for making some time tonight. Also, thank you for how graciously quick they were all on saying yes to joining us tonight. I think that shows a lot about our community wanting to put, events like this on with VEF. So thanks so much.
Thanks, Amy. I'll just finish it off here. It's never the good situation to be standing in between beers, but I think there was a lot of good takeaways from tonight's panelists. The great work that all of you entrepreneurs are doing, capital, talent. There's some really good programs that are happening specifically around the conversation of immigration and talent, the global skills visa that was announced recently, as well as the startup visa program that's had some recent successes. Actually, a Vancouver-based company was acquired by Kickstarter, one of our portfolio companies, and they're actually opening up a Kickstarter office here in Vancouver, which is exciting, and I think there's a lot more to come from that kind of thing. Vancouver is also the highest growth in terms of head offices, and I think kind of plays to our next event that's coming up in March, which is around the balancing act of corporate startup innovation. So hopefully you'll join us. Please enjoy the drinks, networking, meeting any of the panelists or lightning pitches. If you have any questions for any of us, happy to answer those, and enjoy the rest of your evening.